I found that I was listening to a lot of K-pop this week as I was working. I like to listen to music, and
All
I was
right.
listening to a lot of
Okay.
K-pop this week because it's like up tempo, it's exciting, it's kind of happy, and I don't understand a word of it. That is how I felt about this entire week.
Hello, everyone. Welcome to another episode of The Circuit. I am Ben Beharin.
Greetings, programs. I'm Jay Goldberg. So Ben, last week I was profiled by Bloomberg,
I saw.
and and
I tweeted.
I appreciate that. And in that article, which I thought was really well written, I appreciate Ryan and Jaron from Bloomberg for writing that. That was very kind of them. But they did call me a cantankerous punk rock gadget geek because the sort of focus of their article was my take on Nvidia, and so so I decided I liked the sound of that, so I got a T-shirt made,
Yes.
cantankerous punk rock gadget geek.
Dang.
Um,
I need one that says Cantankerous Punk Rock Gadget Geek's friend, podcast co host.
so yeah, so here we're 200 episodes in, and we have merch now
We have merch.
in the
The
form of a single T-shirt.
my favorite part of this whole article, if anybody didn't see it, is that they made a chart. All right. And so the chart is entitled Nvidia's Lone Bear. And buy ratings 73 is a large green bar. 6 hold ratings, small red bar. 1 sell rating, small bar. It's like, dude, it's the most out of consensus call possibly in the history of out of consensus calls. So we have to appreciate your game.
Yeah, so cantankerous. I think my greeting on the top of the show from now on is going to be "Get off my lawn."
Please, please do. I mean, everybody knows you're the slightliest curmudgeoned, but not terribly curmudgeoned.
I've been
Optimistic at
upgraded.
times.
I've been upgraded from curmudgeon to cantankerous.
Yes, I know. Everybody, I think, wants your whole us to debate this, but it's not what I want to do right now. But
Not today.
regardless, it was a great article. It was fun, a lot of fun. I'll put it to you that way. Um, all right, let's start off with we got a hot topic or a hot sub whole episode for you all because a lot happened this week. Hyperscaler earnings were nutty. CAPEX boom part 5 to the moon. But we're going to start with some news about a startup called Substrate, who is kind of taking on the world when it comes
Hmm.
to a new approach to lithography and a desire to be a foundry. And so based on news, we haven't had lengthy conversations, right, with well, some fuzz have of the company, but something we do want to explore more about Substrate. So Jay, launch us off with the news and any takes you had.
So Substrate is a privately held company. It's a startup based here in San Francisco, and they've been around for many years. And I've heard rumblings and rumors of this company out there doing something, but this week they officially decloaked. And I met them. I met their CEO recently. Very nice guy. And their proposition is that they have created a new lithography tool. So this is in competition essentially with ASML's EUV systems. And they claim that it is working and that it has some really incredible performance. It's capable of doing, call it 1.5 nanometer and below, right? Probably even lower. And in addition to that, what they're proposing is they're not just going to sell this tool, they actually want to start their own fab. And they've already got land or they're in the process of getting land and building their own fab to use their tools to compete not only with ASML but with TSMC. And the basic proposition is that their tool is radically cheaper and simpler than ASML than EUV, and that is EUV is such a that is the key constraint in chip production today. And so if you can reduce the cost of that by whatever they're going to do it by, you can re-alter the economics of not just tools but of semiconductors entirely. super big vision. Super
Yes.
big vision.
Moonshot, as some would say. And
Moonshot.
good for people to take moonshots. Obviously, right, when you talk about the opportunity here is that most don't know, and this includes TSMC and Intel, and to some degree Samsung, like how we're going to get below 1.5, particularly below 1 nanometer. Whether that's some degree of CFETs and transistors, are we going to stack things higher? So it's still a huge question mark. Lots of theoreticals out there from IBM and others, but important need, right? Because we will reach the scales of Moore's law. We will, shrinks will become harder and harder and harder, and so we've always known, right? Some breakthroughs have got to happen for us to get sub 1 nanometer. So that's kind of the moonshot, right? That they're at in process.
Well, I think even before we get there, they can disrupt 2 nanometer, 1.5, and everything that's coming soon.
Right.
So big vision, and right now set against that, there are obviously a lot of questions. This is a very secretive company, has to be incredible trade secrets involved. You know, you, it's not unreasonable to say that they have to be concerned about state level espionage, trying to get at what they're doing. So they have to be very secretive, and they haven't said a lot. But they decloaked this week. They had a big round of publicity, and they've made some claims. They've put out some technical detail. Semi Analysis did a pretty thorough
Yeah.
rundown of what limited information they did put out, and they gave it they seemed impressed. So I think there's a whole spectrum of questions that sort of occur to me about this. They obviously have a big wall to climb, not just in terms of becoming a business, but just in terms of building credibility. And I think the first one is, does the tool actually work? I think it does. I know I talk to people who are a little more skeptical, but let's say for now it actually works. Um, the next question is, how well does it work? What are the commercial volumes like? The CEO was on Ben Thompson's podcast on Stratechery, and he actually made a pretty he seemed to think it sounded further along than I thought, right? Because my first
Sure.
impression was, okay, they have a working tool, but lots of people have working tools. How do you get it to commercial volumes? It sounds like they have a path to that that's pretty clear. But automating it and getting it to scale is very important, right? Because China has EUV light sources, none of them are commercially viable at this volume, right? So the next thing I have to wonder about is, what does the ecosystem look like? What other tools? How does this change the tooling landscape inside a fab? Do you need more of other tools? You don't need EUV systems. That's a big cost saver. But what other tools do you need more or less of? What do the chemicals look like? Do you have to treat the wafers any differently? All kinds of sort of like commercialization questions, right? And right, so I have many questions. I'll tell you, lay my cards on the table. I want to believe this is true. I want to believe
Of course.
they
Sure.
right. But as an analyst, when I hear something that I feel an emotional reaction to, I feel like I have to be doubly skeptical. So lots of questions. I think there's something very promising here. James, if you're listening, come on the show. We'd love to have you. But I can go down and list all the things, all the questions, and all the skepticism I have. I think there's a whole bunch of questions. On the flip side of that, if they get this right, there's all kinds of upsides, and maybe we'll save that for when he comes on, or if he comes on. But I think if you start to think through where the model can go with what they're proposing, it's some pretty profound changes, and it's probably in some unexpected ways. So
Yep.
interesting,
Yep.
very interesting company, worth following.
Yep. Yep, agreed. I mean, I'm a sucker for innovation. So anything here that is deeply innovative and can disrupt or change, or more importantly, bring this into the United States, is a big deal, and we all want to see that work. So yes, let's have James on the show. I believe he is a listener. So uh, let's chat. All right, let's talk about GTC DC this week. So there was news, and then there was confusion. So I first like to say I don't want to not neglect the news, but we do have to start with what essentially was a $300 billion slide from Jensen. The title of it was 500 billion, but when you broke it down to their clarity, it was 300ish. Anyway, let's talk about this for a minute. Essentially, and man, I don't know why they did this, because I don't know. It feels like the kind of thing, like, let's just do these types of things at earnings. But there was a slide, and basically, Jensen said GB200 NV72 demand is exceptionally strong, with 500 trillion in total Blackwell Rubin revenue through CY26, which also then had a slide that said, was it 5 million GPUs, 6 million GPUs
20
shipped,
million.
which we need to
Oh,
no,
shipped,
that's
yeah.
20
Yeah,
going
shipped.
to ship, yeah, shipped, and then 20 million going to be shipped, which I attempted in my simulator. And on my simulator for Nvidia GPUs was already like very bullish, right? I took that sucker to 200% growth year over year, and I still couldn't go from the shipment volume of this year, which is, we thought roughly around 6 million was our estimate anyway, to 20 next year, which is more than 200%. So my simulator didn't even account for the type of growth that he is projecting. And the street freaked out. Everybody was like, holy crap, the stock went up a ton. It's still up quite a bit since then. They did have to clarify, which I'll let you describe. But anyway, I'm calling it it's the $500 billion keynote, but it was a $300 billion slide, which added tremendous market volume to them after the fact. So give us your take.
So the what they said was a 500 billion through the end of 26, but that includes
26.
things that are already shipping this quarter. So it's kind of like 5.5 quarters. So
F5.
those are still some pretty big numbers. That's still like 50, 60 billion a quarter. And it implies, I think, 20 million chips for next year, which is a lot. A lot. I think it's more than most people are expecting. Not like by a huge amount. Not by a huge amount. But it is more than people expected. So that implies that TSMC has gotten CoWoS capacity up. It is going to get a lot more CoWoS capacity, packaging capacity later this year, or sorry, somewhere in middle of next year, and really accelerate those things. There's some big numbers. I will give them that. There's some big numbers.
I mean, it was far more material than anybody thought, and in the callbacks they clarified, like, some of that was actually shipped, so that's not a total shipping between now and then, which I
Right.
sort of assumed, and that it's really whole package, so that includes networking. It was not just GPU die sales dollars,
Yes.
because if you'd have done that, right, you'd come at different numbers. So that clarity helped. I mean, it's crazy, like, to go to that number of cumulative GPUs, right? 20 million between roughly those 5 quarters, right? Now and next year is not what I expected in volume. Like, most people had them maybe moving to 7 to 8, maybe 9 million GPUs at best next year. And I get that NVLink is moving to 140, Rubin's 144 GPUs per rack versus 72. I get that. That's still, it's a lot of GPUs.
So the number I had for this year was about 7 million.
Yeah, same.
20 million next year. I'd assumed it was like 15. 20
Oh,
is bigger than. Yeah,
yeah.
it's a big increase.
Uh,
And the other thing I haven't seen clarified either is, like, when you talk about that, are you is that die or is that Jensen math, right? Because, right, Blackwell is two chips, but they sell it as one unit, and so there's always confusion about that, about how he's actually coming up with that number. Um, but so just think through the number. They're 300 billion dollars over 5 quarters is 60 billion a quarter. Last quarter they just crossed 50 billion a quarter. So again, it's up, but I don't think it's most people saw it as upside, but it's not like above the highest numbers on the street.
Yeah. So to your point, there's actually a clarifier on that slide, if you zoomed into it, that said it is being counted. It is 2. So that is counted as 2, so it's really 1. So that's probably more like
Yeah.
10 million packages, which is not, it's not absurd. I just, dude, like, I don't know. Like, it's just, we're growing it. This growing at a crazy rate. And remember, this goes back to like my sort of broad theory was like, how does Nvidia, really continue to make money over this timeline? Is it they just sell, right, again, 20 million GPUs, or are they selling 10 million, but the ASP is rising, right, of those GPU racks? And so that's the balance that they'll keep striking. But regardless, as everybody who follows this knows, it created quite the stir in the industry when he came out and gave a fairly material projection in the middle of a keynote to Washington. So
Yeah.
um, okay, there was other news, but I'm actually very curious for you because this was your wheelhouse. Um, what in the world is AI RAN?
Oh, yeah. This is the weirdest thing to me. Is all right. So, all right. Let me take a step back. For some reason, I don't quite follow. Jensen seems very interested in telecom, right? I don't know why. I mean, and it goes back a long way, right? Back 15 years ago, he tried to compete with Qualcomm for a hot minute,
Mm-hmm.
and
Bought a modem
all
company.
he bought Icera, the modem company,
Yep.
right? And all along the AI ramp over the last 3 years, every keynote essentially, every GTC keynote, there's been some telecom content in there, right? They have this tool for simulating cell towers. That was 2 years ago. He talks about base stations a lot, and I think partly it's because the the physics of radio waves propagating through a city across cell towers is a pretty solvable problem for GPUs. It's basically ray tracing, right? And
Mm-hmm.
so there's a very clear application there, which is okay. So that right, I get that he has the tool to solve that problem, but like why bother, right? You're chasing the data center market. You have such a strong position there. Why are you worried about the telecom market where people I know there are worried that the operators can't afford any more equipment, let alone AI GPUs from Nvidia at Nvidia margins. He's
Yeah.
very interested in it. Um, they invested $1 billion in Nokia. um, okay,
Yep. Yep.
so AI RAN. So RAN is the radio access network. That's the layer that connects the cell phone to the towers. It's a pretty fun mathematical problem. There's all kinds of that's where the real value of a telecom operator exists. The better they can get their RAN tuned, the more money they can make from their operations. And there is this thing called Open RAN, which is
Yeah. Yeah.
whatever. It's an open source project.
Yeah.
Don't have to get into it. So one way to manage RAN, and of course, Nvidia is proposing AI RAN. Or I don't think it's a formal proposal, but it's like just the idea
That's
that
what they're calling it. Yep.
you can use AI tools to manage the RAN,
Yep.
which again is not like surprising. What's surprising to me is that Jensen cares. I don't quite get it. I don't quite. I suspect it's in DC. There are a lot of telecom lobbyists there. He wants to get their attention, so he brought it up. But
Yeah.
still, he invested $1 billion, €1 billion in Nokia.
Yep. 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 6G is going to be built on AI, Jay. This is the language of the Jensen. His interest and desire to be attached to everything in AI. In the release, actually, it was cited a $200 billion cumulative opportunity by 2030. So there's dollars there, but I get it, right?
I don't think 6G build up begins before 2030. So
That's
maybe
a good
maybe take this
question.
maybe take those numbers with a little bit of salt.
The life of a G is roughly 20 years and extending. When did 5G start? Dang, man, this is a quiz question. We should know.
5 years ago.
So you're right. It would be midway point beginning. So 2030 would be the earliest
Yeah,
you'd
this
see
one's gonna
it.
be a little bit longer.
Yeah.
6G.
So
Nobody's in a hurry to build out 6G. Right. I think what will come first is they will get some volume at Nokia, Not sure what good that gets them, but like there's a lot of build out for 5G still taking place. People are sort of improving and densifying their networks. Um, but I just it's hard for me to see this becoming a meaningful chunk for Nvidia anytime soon.
Yeah. So the other part they mentioned, which got some talk and also again kind of confuses me, is NVQ link. So now apparently GPUs can be connected to quantum processors or QPUs and help accelerate quantum computers. And I say this because I'm confused, to be honest with you, what Jensen's stance on quantum is, because for a while it was like, oh man, it's just way out there, right? Then the quantum stocks crashed. Then it was like, okay, they're kind of there, let's talk about it. And you see announcements happening, and now they have NVQ Link, which is a compatibility of GPUs to quantum. But again, is quantum still 10 years away? Is it sooner? Is it like, I'm confused because let's just say they've gone back and forth. But there was an announcement relative to this with quantum and GPUs that got a lot of the quantum bulls excited in the commentary world, and a lot of people are out pouring cold water on said quantum bulls because it is again a technically distant thing, but not bad, I guess, to make an announcement about playing friendly with quantum with NVQ Link.
So I will preface this all by saying I don't understand quantum computing. I'm not up to date in it. I know it's out there, kind of, but like my 13-year-old keeps coming to ask me how quantum computers work, and like, I'm just like one page of Wikipedia ahead of him in this conversation. So so I don't know tons about quantum. I agree with you. It's still we're lots of progress, but it's still pretty far away. I think this is another area where Jensen is just showing his engineer and his inner geek. He's very interested in quantum, like he has been in telecom for a long time. I think it's reasonable to say like Jensen has a good intuition for what the next big technology is. He saw AI way ahead of everybody else. I think he, in his mental math, he's probably looking at quantum in the same way. As it's going to take years, but he'll invest against it now because he
Sure.
can. And
Right. Right.
um, I also think that again, you think of the venue. He's in D.C. Uh, right? They scheduled this conference just a few months ago, right uh, the when Jensen got very close to the president, right? So they scheduled this event in D.C. I can imagine that a topic of interest to many people in the DC audience is security and quantum. Remember, we had our guest from Rambus on last year talking about post quantum security. People in DC probably care a lot more about quantum than the average engineer here in the Valley
Yeah.
or at the
Right.
GTC San Jose will have. So he's speaking to the audience, but I also think he just is generally interested, genuinely interested in it.
Yes. No. Agreed. Anyway, yeah, I have conversations with folks in that realm, and it still is a ways off. But a breakthrough could happen. But anyway, quantum's different subject. I'm just rolling through the news. They will play friendly with NVQ Link. All right. Let's move on from Nvidia to the hyperscalers this week, continuing to essentially prove incredible demand for infrastructure, for power, kind of across the board. Microsoft beat. Basically, I looked at this. I looked at this primarily in their data center revenue growth. Like the cloud revenue growth was really the only focal point I largely had, right? And so looking at what Microsoft, Google, and Amazon did, all three of them beat their kind of whisper expectations of cloud growth. Microsoft had the most at 40%, which was above the 37% guide and 38, 39-ish% whisper guide. So they crushed it. Continued acceleration, right, for Microsoft, just quarter over quarter in Azure, as again, they talk about needing to support and build out capacity for AI workloads, demand for AI workloads. Google similarly beat. They made a big conversation about TPU demand, TPU build out. Again, back to infrastructure and demand, essentially saying everybody's got more demand for compute than they have capacity for. And Amazon the same. They up 20%. Expectations were for 18, so a good beat there. But they're still the standout of slow growth compared to the other two, GCP and Azure. Again, because both those companies are still seeing the vast majority of early onboarding of AI workloads, which are still being deployed, not 100% deployed, but largely they're absorbing some of that. Microsoft, clearly because of OpenAI, right? OpenAI is still the predominant place that both from an LLM and an API call standpoint, most enterprises are using for either their testing, early deployments, stuff like that. But Google is pretty bullish on Gemini, the API calls they're having, customer deals that they're getting in the billions now for GCP. So you walk away from all three of these things, and on top of that, I'm just going to throw a random name in that came across me to start having to track Caterpillar. And this became because Caterpillar is moving equipment as well as some assets they have around gas turbines and whatnot. All to say that this was the sort of the fundamental point I want to make, and then you talk about what you're taking earnings to. The people who just I keep seeing in my Twitter feed who are like, nah, this is not happening. This is all fake. It's all circular. I'm like you've literally got to believe that everybody's in on this con. Like across everything. Dirt, construction, manholes, like we talked about last week. It's like everybody's in on it. Everybody's like, dude, we're just gonna tell everybody like we cannot meet demand, and it's just you can't find a data point that's not like we're literally booked out for the foreseeable future with equipment and we can't meet demand. Like that is the consistent narrative of executives of everybody in this chain.
So this was an incredible week for news. There was so much going on. It was kind of exciting, lots of energy. I found that I was listening to a lot of K-pop this week as I was working. I like to listen to music, and
All
I was
right.
listening to a lot of
Okay.
K-pop this week because it's like up tempo, it's exciting, it's kind of happy, and I don't understand a word of it.
Yep.
That is how I felt about this entire week. The whole thing is so confusing to me because you know, in the mornings I'll get up and I'll watch all these keynotes and I'll hear all this news, and then later in the day I'll be talking to various investors or various participants in different parts of the chain, and I hear a very different story, a different side of the story. There are so many conflicting data points out there. I am, I am, I have no idea what's going on. I'm super confused about it all because I see what you're saying. Like everybody, like agreed. If anybody who has a plot of land and two telephone poles is going out and saying, "Hey, I have energy, build a data center here." Um,
Yeah.
there's like hundreds of those companies. Like I talked to somebody who is at one of the hyperscalers, and it's his job to vet those, and he's just like pulling out his hair. He has so many things to sort of vet and figure out which of these are legitimate and which aren't. Um, and yeah, if you have a data center, you can of GPU full of GPUs, you can get to pretty high utilization very quickly. But at the same time, like on the fringes of it, if you talk to people about who where the customers are and what they're using, it gets a little murkier, right? Um, like go ask them the neoclouds what utilization they're seeing on their H100s. Right, everybody has Blackwell coming out now. What does H100 look like? And I've heard very different things. I'm in the process of going through and trying to sort through that. Um, demand is there. I'm just not entirely clear where the demand is coming from. Who these ultimate end customers are? I think you mentioned OpenAI being the default enterprise. I would push back on that. I'd say that Anthropic is becoming the default enterprise AI tool, and that's largely built around a pretty narrow set of product offerings, right? Largely around coding. Um, I think Anthropic is very, very clearly focused on a small number of business models. OpenAI, by contrast, has gotten so big, and they're clearly trying everything. Um, I think the enterprise market is sort of shifting towards the more focused player. So there's a lot going on. it was very interesting to me to look at the hyperscalers results because um, Google and Amazon both either reiterated or raised their capex numbers,
Yeah.
and their stock went up. Yay!
Right.
Facebook raised their capex numbers, and their stock went down
Right. Yep.
because of that. And I think that's important because you know 6 months ago I if I would have said if any company, any hyperscaler cut their capex, their stock would get punished because
Right.
investors want them investing for the future, and that is starting to change. Like that is like we're starting to see some cracks in that thesis because right, Facebook is spending a lot of money and they don't have a lot to
Yeah.
show for it yet.
Yeah. Yeah. I mean, and I think the commentary was interesting because you contrast. And to your point, Microsoft actually had a really good quarter. I believe they also slightly increased a ton, and their stock went down. And I couldn't tell if that was just because people thought the guide is somewhat light for next quarter, but essentially, like everybody's saying the same thing: demand is off the charts. They don't have much capacity. They're overscribed on all capacity that they've got and are planning for, et cetera, et cetera, et cetera. But the question came up to all three CEOs in cloud. Um, is this a bubble? And really, I liked the way that pretty much everybody answered because it showcased or highlighted the very pragmatic approach they're taking to these builds. So they're basically saying if we keep deploying, and I took this as largely a compute infrastructure point, if we keep like building out capacity and committing that to compute infrastructure, and we keep making money of that as a percentage of those costs, and that keeps going up, then it's worth justifying the spend. But they all basically said, like, we're taking a measured, tactical, very clear analytical approach to this to make sure that those things keep pace. So I took that as like, should an imbalance ever happen, meaning that they spend right X number of dollars on GPUs, but revenue doesn't start to keep pace or starts to slow, that they would then start to slow. That's at least my sort of take, is that they tried to convince the street that they're taking a pragmatic approach. This isn't just build, 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 and then hopefully we make money, which maybe is the argument for Meta. It is, we are seeing revenues come from this capex, from this infrastructure, and so because of it, we still feel like we're justified. The one that I find interesting though is I found a chart from Data Center Hawk on gigawatt footprints of each of the hyperscalers. So I just want to talk through this. I tweeted it in case you want to see, but basically, Amazon has the largest of both current footprint between leased and self build, and as well as planned self build expansions in terms of gigawatts, like by a meaningful amount, right? They
Mm-hmm.
are well above others in their planned expansions. And Andy Jassy on the call basically said, like, literally every capacity we bring online, we monetize. Like he was just very clear about that. That as we bring capacity online, we monetize, which I took as great. Right, this is an aggressive sort of build out. But what I was thinking about in all of this is, and this comes on the back of me reading like 6 different CIO surveys across Fortune 500 companies this week from different banks, was everybody's sort of saying a couple of similar things that I look at this in terms of what is the demand on infrastructure. Like that's why I read these notes, is what's the demand on infrastructure coming from software. And they're all saying a couple of things. One, they're continuing to want and need to contribute parts of IT budget just to keep moving more workloads to the cloud. Like not even AI, like just general cloud workloads. They got to move more right to the cloud. So you've got constraints on existing general purpose traditional data center infrastructure. So that just, and to be honest with you, if AI didn't happen, they'd still need to expand that in some capacity. Like they'd still need more capacity to handle traditional cloud. Add AI, and it's like whatever exponentials in gigawatts of capacity that they need just to start bringing on token factories, to use Satya's term instead of Jensen's and AI factories. He's calling them token factories. So great. So I get the need that this is like just cloud expansion in general. AI adds all this dimension, but you've got all these CIOs basically going like, we're still going to commit a lot of money just to get cloud workloads, and less than 10%, almost uniformly, is what's being spent today from an IT budget on AI. So there's just tons of runway to also onboard AI workloads, which we know consumes more compute in gigawatts than cloud native workloads, and that simultaneously shift to the cloud of general purpose and increasing it's happening at the same time. So it's like you look at that, and that's where I look at these capacity expansions as one. Not all of this is not 100% of all this new capacity is going to be AI infra. Some of it's going to be they just need more general purpose infra, but they also need a lot of greenfield AI infrastructure because it's unlikely to me that either any of these companies we're talking about are just going to decrease their footprint for cloud native infrastructure because they need more. So like they're not ripping out portions of existing data centers to go and build AI factories in those. They need all of that general purpose compute for traditional workloads and more. So the greenfield stuff is like this is new infrastructure for all these workloads, which include general purpose and AI. And I think once like you wrestle with all of that, it's just like we're trending to this direction for cloud that's just far much more compute emphasized by AI than really anybody understood a couple of years ago. And I think that's why these investments are happening in this just huge moment of the demand for cloud compute, the undercall we have on power, and the need to expand that and obviously monetize, which is the revenue question that kept coming up to make sure it keeps pace with capacity. So there's my brief rant on that capacity.
So okay. I'm not sure. I'm not sure where I stand on a lot of this. I think I think that I agree that the sort of traditional CPU cloud stuff would continue to build. I think it would be higher. It would be growing faster now than it is, but so much of the budget has to go to GPU. So I agree that there's certainly still lots of demand from traditional cloud. I am much more, I don't know about skeptical, but I still don't fully understand when Amazon or Google say they're sold out of AI compute. How much of that includes their big customer? How concentrated is that?
Right.
Because
yes.
at both companies, they have Anthropic as a customer. That came out this week. That was pretty significant news. From Amazon was that Trainium still is that's their biggest. I think their biggest external customer for Trainium is Anthropic.
Yeah.
Not surprising, but they actually said it. So how much customer concentration do they actually have, and does that explain it? Because it's one thing to say, oh, everybody's doing AI, and so we have thousands and thousands of customers filling up our data centers. It's another to say we have one big customer who's building a foundational
one
model,
or two, or yes,
right? Because that's again, I come back to I think of that revenue differently because I don't know how long it lasts, right?
Okay.
And I sort of look at that for all the neo clouds. Like you have external customers and you have like these big, massive anchor customers who ultimately are going to want to build own their own capacity, right? If Microsoft didn't have to deal with neoclouds, they wouldn't, but they can't get the power and the GPUs they want right now. But there's always that risk that someday they can get access to that. And I think the same is true with Anthropic. So I would like to know more where that's coming from.
Yes.
And because I think there's another thing, like the numerator of that equation in Amazon's case, they say they're selling out whenever they put up a GPU, you say they sell it out.
All capacity they bring online, they sell. Yes.
That's right. But they actually don't have that much capacity.
Right.
If relative to everybody else, they are underweight. And I actually think that is the sort of driving force behind a lot of this right now is there is a big fight taking place for the future of the cloud. Who is going to control cloud computing? It's a massive, important market. Who's going to control public cloud computing in the future? And the race is between the incumbents, Microsoft, Google, Amazon, and Nvidia on the other side. Right? Nvidia really would like to have a world in which there are 200 neoclouds. There, that was another number I heard this week. There are actually 280 something neoclouds. Right? That's fantastic. If you're Nvidia and you're selling to 280 customers, your customer base is fragmented. None of them have control. If you have to sell to three of them, um, then that's a very different market. Especially now because those customers are all kind of in various degrees of agitated, angry at Nvidia, and are pushing the hardest to build their own custom silicon. Right. So for the first time, I'm starting to see. I understand where Amazon sees the value of having their own silicon, Trainium. I've questioned it before many times in the show. For them, the strategic benefit of having their own silicon is that it's a major counter to Nvidia.
Yeah.
And so I think that's how the landscape shapes out over the next. That's the standards wars of our time for AI. Is it going to be Nvidia
Yeah.
with hundreds of small customers, or are the big hyperscalers going to be able to reassert control?
Yeah. And some of my take on them being to this term, right, capacity constrained, is there was just a lot of old GPUs out there, and a Blackwell solution is leaps better than Hopper, and there was a lot of Hoppers out there, and the Hoppers are still being used, right? You can get back to amperes and voltas. Apparently, you can still find these for
Yeah.
dollars and whatnot, right, per GPU. So those are like you in this world of increased demand for AI infra and AI workloads. You're just going to reach, you know, all of their physical limits when you don't have the same access to cutting edge compute, right? I think an interesting question is like, where are we in 2 years when, say, a good portion of availability, maybe 50% or 40% of a factory AI factory's infrastructure is Grace Blackwell and above, right? Some Vera Rubin, right? In that point in time, like we should see, I think, a meaningful change in compute capabilities based on that infrastructure. So, it's such a step function forward that I feel like I can feel that. If you're like, look, there's only very small amount of Grace Blackwells and even B200s today in the world, and the vast majority of the needs are still running on poor hoppers. You're like, okay, I could see that, right? Just get us all to Blackwells as fast as possible. But this is exactly what I want to bring up about Trainium is, and I would say that I feel this tension with Google too, but I do feel like Google, at least this perception is they're going to get third-party CSP workloads to keep moving to TPUs. Like it feels like people believe that, and I would say that's true. Obviously, we would love to see that get proved out across numbers of customers. But Amazon sort of said the same thing around Trainium, right? They said they're growing. They're oversubscribed for Trainium 2 today. They're seeing tremendous growth in that. I think it was 150% in capacity demand, but it is concentrated to a few small customers. They were very clear about that, and their goal is to make, as Trainium 3 comes online, and it sounds like they're trying to scale that to something like 2-ish million units next year. That they want to have those come to third party customers. My issue is this whole strategy hinges on them getting third party customers for
Yeah.
Trainium, because if you don't, then you need to pivot to GPUs. Like if the third party, if 80% of the third party CSP workloads go, we just want to run on GPUs, then you gotta just let them run on GPUs. And to your exact point, they are under, their install base of GPUs is less than others. So it is a deficiency because they've doubled down so much on Trainium, which again, I'm the biggest defender of custom silicon. It's exactly what I would do. Control your destiny, own the infrastructure. But if the market doesn't go there, that's a problem, in my opinion. And I think 2026 is a make or break year for them on whether Trainium 3 can scale to third party workloads and get the volume they need, or do they need to just hard pivot and figure out how to get GPUs, even if that means doing deals with neoclouds who have more GPUs than them.
Yeah, I think I think in this case that's why Trainium or Anthropic matters, right? Because Anthropic is on Trainium. It's a little bit unclear though. Are they there by choice, or are they there because Amazon invested in them and gave them a whole bunch of free Trainium for equity? Right. It's a very different story. Now, Amazon is fairly skilled at building up sort of software support tools. Not to a CUDA level, but they have some experience in building up software ecosystems because we saw that
Yeah.
with ARM servers. They've done really well with Graviton,
Yep.
right? And a lot of that was on the back of work they did in sort of pushing all the infrastructure software, the databases and the BIOS and all that, getting that up and running for ARM CPUs. And it's reasonable to think that they could do that something similar with AI for Trainium, but it's not the same thing. And so I think you're onto the right question: is how much third party customers are going to be willing to take on learning a new thing? Because I think if you talk to most engineers who are actually deploying AI systems, they would just say, please, just give me Blackwell, just give me Nvidia. But I think it's gotten to the point now where Nvidia has so much strategic influence that the hyperscalers in particular are going to start pushing their own developers to diversify away from that because they have to. And if it were just a matter of like cost savings, like it was a few years ago, oh, do an alternative to save some, that's not worth it. But when it's like a strategic imperative, like it could be for if Amazon wants to stay in the cloud computing business, they need to be able to push back against Nvidia, and I think Trainium is how they do it. And similar with Google, although they kind of came about it in a different way, it's still what they're doing.
Just to emphasize where we are in the world today, um, we are largely, as you said, right, in an API calling world, which basically means that existing software and services, whether that's a chat bot or a service query, right, from a company, they're just tied into either Anthropic or OpenAI's API, right? You're just running that model on top of your existing database structure or cloud structure, whatever that is. At some point, though, like, and that's why I think this point of what IT budget means as a percentage of cloud is not just those API calls; it's that they will start bringing, right, dedicated AI workloads running on some level of AI software also to those enterprises, which is where that software stack that you just described matters, right? I care about the security functions. I care about how you manage my GPU workloads via Kubernetes or whatever, right? So that comes into play there because right now, a good example of this, right? This is just for anybody who tracks finances and uses the service, like you'd see it, is like we use Quarter, and Quarter has a very good AI summary that you can just query for, transcript calls. That's run by GPT-5. And you can just like they are integrating GPT-5 into right their existing SaaS architecture, and you can see this across a host of cloud companies or services, right? When they're integrating AI, it's just using ChatGPT, right, as an API call. But that's today, right? That's a whole lot of workloads just need to be managed, need to have that software layer that Amazon and Microsoft and Google provide in just core management for those workloads. But those are going to run on right GPU compute because they're doing inference at scale. So that's the big like we are nowhere near that yet. That's the world's like moving in that direction, and that's I think the rub as to exactly like you said is who's going to win that. And I just keep coming back to because I take a technical lens of this that who has the right infrastructure, competitive infrastructure, will be the ones that continue to be the most attractive to get these AI workloads.
I think that's right, and I'll tell you, like so much of this is unsettled. So many of the business models are still unclear. So many of the applications are still unclear. That a lot of things are up for grabs. Right, assuming that everything keeps moving in the direction of more AI compute becoming just the basis of internet usage. There's a lot more. There are a lot of moving pieces here in the sense that we could end up a few years down the road with a very very different landscape
Mm.
than we have today. And I was thinking about this because I was listening into part of the Cloudflare call they reported last night.
Mm.
And Cloudflare is an interesting company. They do all kinds of important services for networking websites. And one of the things they kept talking about was in an agentic, if AI becomes sort of all these agents running around, our agentic future, um, that actually really works in their favor because that's one of the things they're good at is sort of teasing together multiple services, if you're calling multiple web libraries or multiple APIs, chances are pretty good that you're going to run it through some kind of Cloudflare service at some point. And you could just see how that's a really good place for an agent which is doing work on your behalf, calling, making all kinds of web inquiries and going all over the web. It's gonna that's an interesting thing for them, and that is probably going to end up being a problem for Amazon, right? Who would much rather keep everything closer to home, and they would rather control the networking.
Right.
Cloudflare and Amazon go back and forth. There's a lot of conflict between those two in sort of the
Right.
nitty gritty of their business, and you could easily see a world in which Amazon loses power, and that is good for Cloudflare, or vice versa. And I think none of this stuff is clear yet. I mean, we're going to use a lot more of it, but who ultimately wins in that is still very much up in the air.
Yeah. I mean, that's the thing, right? This is a fascinating dynamic as to which cloud providers are chosen or migrated more to, even in a multi-cloud environment, based on who has the right infrastructure and the best AI models. Like, and it's still, I think, up in the air. Like, I get all the positive sentiment for AWS, right? The belief is if they just execute well, they're best positioned, and there's truth to that. But it is still a very, unsettled, right? We don't know. It's still up in the air to a degree.
Yeah, I don't think we even know the terms of competition yet because you just mentioned who has the best model. Not clear to me that that's going to be the determining factor. Is it going to be models versus models? Is it going to be business models versus business models? Is it some other function? I think it's there's a lot of uncertainty, which is
Yeah.
good if you're new to this business.
Right.
Right.
Yeah. All right. Lastly, even though it's not entirely semiconductor related, to say it's worth just briefly calling everybody's favorite consumer device company, Apple also reported yesterday. I will let you yesterday. Yes, yesterday. Yeah,
It
last
was
night.
yesterday. Yeah.
Yeah.
So
I'll let you drop the bomb. Go ahead.
Apple results are very simple. I know everyone wants to talk about AI and all these complicated things, but sometimes it is simple enough. Have good phone, number go up. Right? It's as simple as that. Like they have the 17 and the Air are hot. They look great. People want to buy them.
Yep.
Good for Apple's numbers. Yeah, AI is an existential threat to them somewhere down the road if they can't sort it out, but that's down the road. Today, their numbers look good because they have good phones.
Good phones, and the next 2 quarters are historically very good quarters for them between
Yep.
U.S. and China. So let's see.
Yeah. One last thing I thought of. I have to give a shout out to uh, Skyworks is buying Corvo, and most of our
Yes.
listeners are probably don't care, but I know that I have a few people who do care a lot. This is a deal we have all been waiting for years to happen. Um, the RF space is consolidated. When I started in the industry, there were 30 people doing RF. Now there are 4, and they're going to be 3 when this deal closes. So big news, probably good for Skyworks, not so great for Qualcomm, but important nonetheless. And so I just wanted to give a shout out to the RF folks in the crowd.
Shouts to the RF as the industry consolidates to filters and whatnot. All right. Thanks for listening, everybody. Appreciate your time, and we will talk to you next week.
Thank you for listening, everybody. Tell your friends.